The Japanese indices are trading lower because of the trade data that was reported for the month of April.
All-time high is about, of course, 22,800 or so. I'm not saying it happens immediately, but the line of sight is there.
Overall, weak set of numbers, but the positive commentary could drive the stock higher in the trading session today.
Unaffected price shall be considered for transactions provided that the rumor of such transactions has been clarified within 24 hours.
So we expect to improve by 5 to 7% in the coming year, our turnover and profitability.
25 points higher, so very quiet.
You have a majority government. It doesn't matter whether you're 270, 300 or 330.
There is a lot of speculation about just how much dividend the Reserve Bank of India is going to send to New Delhi.
Now the Nifty is just 1% away from its all-time high levels.
Reduces the burden on companies who need to kind of price a QIB based on an artificial number.
Nifty is in the green, but it has fallen from the highs, been quite volatile, recovered from the lows, and again it saw a fall.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal Studios in Mumbai.
Well, that's the day so far, and this is Closing Bell. We're coming to you live from the CNBC-TV18 Motilal Oswal Studios. Markets are once again treading water, pretty much at the day's highest point, and we'll sort of take it forward. It's about stocks more than what the indices are really doing. It's been like that for the last few sessions. I'm Prashant. With me, my colleagues Rima and Surupi here. Nigel is joining in from the newsroom floor. Guys, hi, good afternoon.
Hi, afternoon.
Good afternoon. I guess it's some of those other big boys from FMCG, some other names that are actually making up for the fact that banks just refuse to play ball. Once again, sluggish on the bank Nifty today.
Yeah, and we have another 60 minutes to go, and this will be the weekly expiry that will play out. So we'll have to see whether or not the Nifty Bank can take support at these levels. We're at the 50-day MA, or in fact, we do see a further slide out here. Earlier this morning as well, we had highlighted 50 and 20-day MA. We could breach one of those levels. For the time being, we're trading below the 50 DMA, but these contracts will expire. So there could be some volatility left for this particular contract.
I mean, there's been the clear lag, isn't it? The Nifty Bank not really being able to do well on up days and, of course, doing badly on down days as well. Today's an up day for the Nifty at least, but the Nifty Bank, of course, no such luck. So just a couple of quick points. Nifty is basically back at the day's, back at yesterday's high. I mean, that's the right way to look at this. So yesterday's high was 22,586, which is, by the way, also the 78.6% retracement of the fall. So 61.8 went, and basically we're talking about line of sight to an all-time high, which is just about 22,800, just a few points under that level. So we are up, and like yesterday, we are finding resistance at that 22,586 level. So let's see what the close looks like. Nifty Bank lagging significantly. I mean, actually, bigger underperformance as compared to yesterday. Here, the low to be defended is 47,340. Not very far away, about 0.5%, 0.75%, that's it. And there are gains in sectors like FMCG, IT and real estate. If you want to really go sectoral, last couple of days, enough and more rotation. PSUs, capital goods, metals, and today it is a few other names which are joining the list of these gainers that we have. Rima.
Bit of a defensive tilt, right? With FMCG and IT doing so well. And IT is going to be in focus ahead of NVIDIA's numbers on Wall Street later tonight. But the Nifty Bank, that's been the spot of bother. And today it's breached the 50-day moving average on the way down, which is 47,785. And in the month of May, it's fallen 3.5% at a time when the Nifty is absolutely flat. And the mid-cap index has eked out a bit of a gain. SBI, ICICI Bank, Axis Bank, all of them under pressure. And metals too, after yesterday's near 4% rally, is seeing some amount of profit booking. So no follow-through, at least on metals.
That's true, but I'm just saying if it hadn't been for some of the big movers, the heavy hitters to come out and play ball today, it would have been a very different picture for the Nifty as well. And by the heavy hitters, obviously the Reliances of the world, so Infosys, Reliance, L&T, Lever, these are the big titans that are actually firing on the green side. So despite that downward push from banks, the Nifty is still managing a pretty decent gain, you'd have to say, 50 odd points higher. But the story really is in the broader market. and not so much on the mid-cap index. That index isn't telling you anything. It's absolutely flat. It's all about individual companies, individual stocks reacting to earnings or some of the other news flow. So I picked up some of them just for reference, to give you a highlight of how there is a lot, beyond that flat curve on the mid-cap index. On the positive side, Strides Pharma just came out with numbers and big reactions the market is willing to give to stocks when numbers are adding up. So 7% on Strides. Gulf Oil has been a very strong one, 12% up on Gulf Oil lubricants right from the morning. JK Tyre's numbers were well received. Then you have stocks on the flip side. BHEL, no matter how confident the management commentary sounds, the market is saying the P&L is not adding up in a quarter in which most PSUs have done so well. We're not interested, not happy. And that reaction's been, absolutely stagnant on BHEL right from the morning. GSFC, VA, Tech Wabag are some of the other stocks which are lackluster. Speaking of PSUs, I just want to end with the chart on BEML. Now, we all remember BEML's numbers were blowout. By the way, even BEL's commentary today in the investor call is very, very positive. So there's green on these other PSUs, industrial PSUs, and that's the 1 month trajectory on the stock. What a fantastic show. 32% higher. Yes, the narrative is positive, but more importantly, the numbers were adding up, at least in the fourth quarter, and the market liked that. So lots of individual stories to track today, Nigel.
Well, that's right. Just take a look at HAL. That stock has flown away. It's up close to around 3.5% as we speak. So big up move is what we're seeing on that one. And don't forget Paytm. From the day's low, that stock is up nearly around 7%. So big recovery is what you've seen. It's moving towards that 5% circuit band, I think, as well. So keep an eye out on that one. Well, let's get Shrikant Chauhan back with us on the show. Hi, Shrikant. Good afternoon and good to see you win. Well, the markets are up close to 50 points, but the Nifty Bank is under pressure. Give us your trade on both the Nifty as well as on the Nifty Bank.
Yeah, good afternoon, Nigel. Good afternoon, everyone. Well, for Nifty, in my opinion, it is consolidating and it is going to consolidate within the broader range of 22,650 and 22,400 or 300 on the downside. On the dismissal of 22,650 on immediate basis, we can see some short covering because there is huge amount of short covering is lined up. I'm going to say option writing is lined up. So above that, we can see a very good amount of short covering. But till then, I think it is going to consolidate. So at these levels, the strategy should be to look for reducing long positions or to be more and more stock specific. In case if there is any correction, then certainly we should look for adding long positions because we don't think that the market will sustain below the levels of 22,300 so easily. On the Bank Nifty, there also today we are seeing some weakness on the back of expiry of the bank index, but close to 47,700, 47,500, the Bank Nifty is having excellent support. And I think this will be an opportunity for short-term traders to create long positions, to take a contra view. Keep a stop loss at 47,500. I think it is going to consolidate or going to remain in a range of 48,500 and 47,500 for a longer time.
Okay, and what about your stock recommendations?
Yeah, as you mentioned, today we are seeing some profit taking in all metal companies. So it is better to stay away for the time being from taking any specific position in metals. But yes, infra companies are still doing well. Most of these companies are very close to their breakout levels like GMR Infra or IRB Infra. In that specifically, IRB Infra looks good, which is currently trading around 73. Here we are expecting stock to move towards 80, 82 sort of levels. We can keep stop loss somewhere close to 69 for creating long positions on IRB Infra. Also, we like Astra Micro from the defense space, which is currently around 775, 778. It is underperforming to the entire basket of this defense stocks, but the way it is forming high top, higher bottom series, I think it is heading for the levels of at least 830, 835 in the near term. So Astra Micro also looks very decent candidate to buy at current levels with a stop loss close to 760.
All right, Shrikant, got that. Thank you very much for the trading calls. We'll come back to you in a bit and get some more ideas going. But let's also analyze a lot of the results, the earnings and the stocks that are in focus, starting off with BHEL. As we've been telling you, there's been marked disappointment on the stock right from the morning. It's still down about 5%. Now, the thing is that the numbers didn't add up. There was disappointment on basic P&L, though the management commentary is still very optimistic. Obviously, they're dealing with a very large order book. But the market is not willing to take on board the fact that there was P&L misses in a quarter, whereas I've been saying a lot of other PSUs have done really well. Let's go across to Vamakshi and get the breakup going. Vamakshi, so what's the analysis?
Well, absolutely. Like you rightly pointed out, in a quarter where a lot of counters like ABB and Siemens are reporting good set of numbers and margin surprises, BHEL on the other hand has reported a weak set of numbers across the board. Revenue for the company came in at 8,260 crores. This is 7% below what the street was expecting. It has been a very sharp disappointment as far as margins are concerned. We were expecting a number somewhere around 14%, but the margins this time around have come in at almost 8.8%. In fact, on a year-on-year basis, margins have declined by almost 400 basis points. EBITDA has come in nearly 43% below, and net profit has come in nearly 41% below what the street was largely anticipating. The receivables also continue to be elevated for the company at almost 8,010 crores. But the positives this time around was the strong order inflow. Their order inflow in the fourth quarter surged up by almost 4 times on a YOY basis, and in fact, this is the highest ever quarterly as well as yearly order inflow. With that, the order book also was at a decadal high at 1.31 lakh crore. The commentary also was positive. They believe that 12 to 15% revenue growth CAGR could be expected over the medium term. The gross margins had been declining for the company, but that is now expected to turn. In fact, they're expecting 10 gigawatt of ordering every year for the next couple of years to continue, and they have 80 train sets of Vande Bharat in their order book, the delivery of which is expected in June 2025. The revenue recognition is expected to start then as well. So overall, the numbers were quite weak, but the positive this time around was on the order inflow as well as the commentary. In fact, we also have an opinion coming in from Macquarie. They say that the EBITDA margin weakness was in sharp contrast to some of the other names that have posted good numbers so far, and they believe that the order inflow outlook is quite healthy, but there is a presence of multiple moving parts. The order backlog is also sort of long gestational period. So overall, that is the reason why they're quite conscious on the margins as well. So overall, Macquarie has given an underperform rating on BHEL, target price of 192 per share.
Okay, thank you very much for joining in. Dilip Bhatt is now with us on the show. Dilip, how would you read these numbers? Weak numbers, but very strong order inflows, 3x. But Q4 has been subdued, and plus the stock has run up. It's trading at valuations of about 35 times FY26. So keeping all that in mind, this 5% dip, is it a buying opportunity, or do you think there is more correction in store?
Well, surely the results have been much below the expectation, without any doubt. And I think the disappointment has been on the front of, apart from top line, even the margins. But as the order book inflow increases, a couple of things will really stand out very well. The cash in the balance sheet will start going up. Company will have enough cash to even execute the orders, notwithstanding that some of the projects are a long gestation period one. It takes time to complete the projects. But I would say that an increasing order book position, expecting the continuity of the government and the focus of the government on the railways, on the energy sector, I think all put together may disappoint maybe another 1 or 2 quarters. But surely, I think at the dips, it certainly becomes a stock to see. Without any doubt that the past 1 or 2 years, the order intake possibly is having the lower margins. But I think as the order book keeps on increasing, going sharply northwards, I think the stock also will follow a similar direction. And I think from the current levels, I would look to buy at every fall.
Okay, so you're willing to look at the glass as half full and not half empty. Got that, Dilip. Just to follow up, a lot of the PSU companies, industrial PSU stocks, have actually had a very good quarter. I mean, whether it was BEML, BEL, HEL's numbers were very, very good, very robust. So do you have a sort of a order of priority or preference? If you were to put fresh money to work, BHEL is one stock, as you pointed out. Anything else in PSUs?
So I think in the cap goods segment and in the industrial space, I think some of these companies like HEL will continue to do increasingly better. BEL will also continue to do better. I'm talking more from the macro point of view, because otherwise the stocks are surely not cheap. They are expensive. but expecting that the order book inflow will continue to dominate the overall scenario and the overall perception, which will ensure that the growth will continue for next at least 4 to 5 years to come. So I think I would say that HAL, HAL, BL, BHEL, maybe some of these would look good. Engineers India is one of those companies which one should keep a watch on also in the PSU space.
Okay, got that. So those are some of the PSUs that you'd perhaps look at. By the way, those flashes on the screen were very, very interesting. I mean, not from the listed, from the non-listed space. Flashes telling a story on Oyo, and what a story it has been. Oyo is basically raising some fresh money from Incred, trying to raise about $80-90 million to repay their debt. But it's the valuation number that's the biggest headline. As of this round, the valuation of the company is down to about $3-4 billion versus a valuation of $10 billion in 2019, just before COVID hit. So stories really changed quite dramatically for Oyo as well. Anyway, back to the listed market then, and Tech Wabag is the next stock on our radar. We have Vivek joining in. Vivek, so tell us what happened. Very sharp negative stock reaction. Then we spoke with the management. They are saying that the order book will start growing. Tell us all the details.
Well, you spoke to the management and that worked like a charm as far as market was concerned. The stock is almost back in the green. After that, basically, the key point that the management highlighted, there are a couple of concerns that we raised to the management. Number one was the slowing order book. Number two, like Rima pointed out, the top line has been flat for quite a few years. Management managed to go ahead and give comfort on all of these factors. Let's have a look at the numbers themselves first. Revenues, higher by 1% just for Q4 on a year-on-year basis. EBITDA higher by 6.5%. The good part was EBITDA margin came in at 12.4% versus 11.7%. So that was something of a bit of a comfort. Profitability this time around coming in at 78 crores. Now, talking about the order book. Now, order book for at the end of Q4 and at the end of FY24, was 11,448 crore. Now, this actually dipped sequentially. It was 11,900 last quarter. And on a year-on-year basis, it was 13,220. So the main concern was, was there not enough orders coming in? But the management did give a clarification saying that because this was the election quarter, this quarter, and maybe in the next quarter, there could be some slowing down in terms of order inflows actually coming in. But one particular number that the management highlighted was the fact that they said that they have bid for projects worth almost $1 billion, both in India as well as abroad. And, if you do a bit of calculation as to even if they get around 50% of that, that itself adds an impressive number to the top line in terms of the order inflow. Now, talking about the guidance that the management has given to the street, revenue growth over the next 3 to 5 years is seen in the range of 15 to 20% CAGR. EBITDA margins are expected to sustain in the range of 13 to 15%. FY24 exit margin was 13%. And the mix of international projects they expect to be well above 50%. What did they tell us? They expect the order book to be in the range of 16 to 17,000 crore by the end of FY25. PAT margin too, they gave a guidance of 9 to 10%. And like we mentioned, $1 billion worth of bids the company has already participated for. And on the back of that, you've seen the very strong recovery in the stock.
This 1 billion, Vivek, reminds me of that old target that VATech had put out back in the day, right? €1 billion in revenues was the target. This was, of course, some 10 years ago. And in the previous interaction when we had the management, they said, well, obviously not putting any timeline, etc., but that number is still aspirational. It's still there in terms of what they'd like to do. Yeah, I mean, the stocks recovered quite nicely. Vivek, thanks very much for that. Another company that you guys spoke with today on the show was Action Construction.
Action Construction, very, very positive
the interview. Again, looking at an acquisition, saying 15-20% growth, but conservative. Maybe we'll do more.
Zero debt, plenty of cash, willing to deploy some in the acquisition, doing capex. Sounding very positive.
And exports picking up is an opportunity for them.
Yeah, absolutely. And, I was just looking at the numbers. They did profits of about 33-40 crores in FY24. You say profits also grow at a conservative, say 20% over the next 2 years. Profit should be about 500 crores. In 26, market cap of about 18,000 crores, a little over 18,000 crores. So when 26 stock is now trading at about 30-35 times earnings, which I don't know if it's, that's the problem. It's not wildly, it's not like where some of these EMS companies, etc. are, but it's not cheap either. Stock, of course, has done phenomenally well. Just look at the last 6 months, I think it's practically doubled, if not more. Dilip, any thoughts on any of these names? Tech Wabag, Action Construction, the crane company?
So I think both the companies we had been tracking, and I would say that certainly they are very well managed companies. They have delivered very consistently, especially ACE Construction in the last couple of years. And I think going forward also, you can expect a similar kind of performance, which they have delivered in the past. But the challenge is to how to value these companies because they are significantly ahead of the normal norms of valuation. So it is not cheap. And whether I would think of buying from the current level, no, I'm not too sure. But I think both the stocks deserve a place in your portfolio, maybe at much slightly lower prices or a little more correction. And if you certainly have it, one should hold on to it. But fresh buying, I think one should avoid. But without any doubt, I think both the companies, particularly ACE, has done extremely well. And looking at the macro scenario, all the segments that they are present into still holds a very good future. And the management is absolutely on the top of their performance in terms of execution, in terms of production. So that is what we really like. And I think even the numbers they're talking about sounds very robust. So I would say, yes, both of them deserve a place in your portfolio. But at the current levels, I would hesitate to buy.
Okay, all right. Hi, Dilip. Good afternoon. Good to see you. And Dilip, I wanted your view on Hitachi Energy. Now, before that, let me get in my colleague Vamakshi. Vamakshi, those numbers look good. Double-digit margins, very, very good. The problem was the stock already ran up, I think, 30% before its numbers. And that's why we're seeing some profit taking. But run us through an analysis and also the takeaways that the management told to us.
Well, absolutely, Nigel. A strong set of numbers coming in from this counter. Revenue saw an uptick of almost 27% YOY, coming in at 1,695 crores. And this is largely being driven by order execution, diverse revenue mix, as well as focus on continuous improvement in the company's operations. Even the margins have actually improved by almost 361 basis points YOY. They were at 7.1% and they've now hit the double-digit mark. They've come in at 10.7%. Now, keep in mind that the company had earlier guided to hit double-digit margins by the end of FY25, but this in fact has come in FY24, so that is a big positive for the company. The net profit has also seen a sharp uptick of almost 124%, coming in at 113 odd crores. The order backlog also remains quite healthy. This is largely being driven by order inflows which were up nearly 11.5% YOY, and for the entire year the order inflows saw an uptick of 14%, excluding the HVDC order seen in FY23. We were joined by the management of Hitachi Energy today, and they believe that high revenue growth helped the margin expansion. They are taking necessary actions to shield the portfolio from the higher metal prices, and in fact they believe that they may take price hikes in order to offset this rise. Transmission investments of nearly 2.4 lakh crores are expected over the next couple of years, and nearly 35 to 40% of this 2.4 lakh crore, which accounts for nearly 84 to 96,000 crores, would become Hitachi's addressable market. The bulk of the ordering for transmission is expected to take place in the next 2 years, and in fact in anticipation of these demand tailwinds, they've already ramped up facilities in Chennai as well as Bangalore. The export contribution may sustain at around 25 to 30%, and they also see StatComs as a very big opportunity. So overall, the commentary from the management was also quite good. The numbers were also quite strong, and as a result, the stock is in focus.
Okay, all right, Vamakshi, thanks a lot for that. So in spite of those positives, the stock has come in for some profit taking. Two factors out there. One is the stock is not particularly cheap, and the second factor has already ran up ahead of its numbers, so maybe some kind of a give back. Dilip, what's your view on Hitachi Energy? It's one of those stocks, at one point of time, maybe a year or so ago, you said that the transmission lines are going to be in focus, and high voltage, only 3 companies have access to it: Siemens, Hitachi Energy, as well as GE. So this was one of the players. I think it's the leader. Hitachi is the leader, particularly in HVDC. What's the view on the stock? It's a 10,000 rupee stock.
Nigel, I think first and foremost, this stock, if you see, like all other stocks, if you see the last 6 months has gone up quite significantly without any doubt. So a lot of it is getting priced in, but one should not forget that this being an MNC always will command a very, very premium valuations. And these kind of results, the double-digit margins and the kind of order inflow and the macro environment all complements very much to the continued interest in the stock. What I would think, Nigel, is that I will not be in a hurry to buy this stock. I think this stock will continue to surprise on the upside without any doubt. But I think it is simply exorbitantly valued at the moment. And maybe I would prefer to wait and watch, because last 6 months to 1 year, the stock performance has been phenomenal, and particularly so in the last 3 months. And I would wait for a while, not be in a hurry to buy, though I like the stock very much.
Okay, thank you very much, Dilip, for joining in. Hindustan Zinc again is seeing a lot of buying. It had a sharp dip about 30 minutes back, but now Hindustan Zinc is up 4%. This is adding on to the 20% rally that it had yesterday. Hindustan Aeronautics also continues to see buying. It's 4% up on Hindustan Zinc now, taking its May rally to 25%. Delivery after yesterday's drubbing is also up now, so deliveries rebounded close to about 3%, and Zaggle Prepaid is also moving up on pretty large volumes, 8% up on Zaggle Prepaid. Get into a break on the other side. Nigel?
All right, Reema, I just want to make one point on Hindustan Zinc. Going by the current market cap of around close to around 3.3 lakh crore odd, the government stake in the company itself is 1 lakh crore. If you want to look at a divestment target, the government could say, I'm looking to sell this and let's see what the bids come in at. So that could be one option, but the stock is trading at 20 times EV upon EBITDA. Most metal companies are less than 10 times. So that's the kind of premium multiples, I think, because of the low float, only 2.5% in the market. That's why the stock has moved up so. And so, someone came up with an idea. They said, why should the government look to sell? Maybe Vedanta will say, let me do an OFS and raise some money. But that's on a lighter note. We'll have to see how this pans out. The reason the stock has gone up is, yes, fundamentally things are looking up. Lead, zinc, silver prices moving up. But the float in the market is very, very limited. And it's trading at 20 times the forward earnings. FY25, FY26 as well. So just keep that in mind. For the timing, we'll slip into a short break. Come back. We'll be joined by Vaibhav Sanghi on the other side. Stay with us.
Welcome back. You got the market, which is up 18 points now. So, the fizz is not lasting. That's the problem. We were up 50, 60 points when we started, and there's a bit of a dip which has come through. The Nifty Bank, we should also take a quick look at it because that was down 0.75%. While the Nifty was up, maybe there's a bit more pressure on the Nifty Bank as well. Yeah, a full 1%, and the dip has come in the last couple of minutes, basically, of trade. Teamlee's numbers are also there at the bottom of the screen. EBITDA is up 30%. We'll be speaking with the management tomorrow. Margins have come in at 1.5 compared to 1.7 and so on and so forth. Stock spiked up sharply on the back of these results, but maybe we'll have some more detail as we go along. 15% higher in terms of profits on a year-on-year basis. Vaibhav Sanghi is with us. He's CEO at Ask Hedge Solutions. Vaibhav, good to have you with us here. Thank you very much for your time. So just a sort of question in terms of what you are doing. And, somebody was saying that because people have made, at least some of the larger HNIs, etc., have made so much money, and that is true, absolutely true, going into something like the election results, even if you believe that there's going to be continuity, etc., you just want to sort of build an abundant caution in that sense. So just stand down till you clear that date. Do you think that is what is happening? And what are you doing at Ask Hedge?
I think, Prashant, first of all, good afternoon. When we talk about an event which is there, a binary event, in fact, which has the potential to take the market up or down massively on depending upon the outcome, no matter how certain the outcome may be. But as a student of risk, there is always a possibility of something kind of being, how the market may kind of, factoring in terms of the outcome. So what we typically do is during around these events is, or any other binary events, is basically that we either go highly hedged or go very light on the portfolio. We do not take a call. Of course, the marker to changing our view on that is either one, we get some amount of exit polls, and post that is something we can probably look to do something. But otherwise, till then, we stay light and wait for the event to kind of pan out.
So this time you're fully hedged, or you've just increased the cash call, and what does it stand at now?
We would be by the close of this month probably fully hedged in that sense. So it's just a matter of a few days now. So we will wait till then. And of course, I mean, I would love to go long if I would have a directional fund, into the event, but then not that because we are a risk-adjusted return fund and a long-short fund. So we will go protected.
But your gut says that, the best approach would be to go long, someone who does not have the compulsions that you have. You would go enter into this event with bullishness?
See, again, I would differentiate into two, parts. One is basically if you're genuinely a long-term investor, to be very honest, it wouldn't matter. You can, stay pretty much long, through the event. And over a longer period of time, India's story being so fantastic, I think, all should make money in any case. But if you're a trader, I think discipline is something which comes, absolutely at the topmost kind of criteria. And if I look at that, then, we'll probably go, hedged in any case from a trader perspective.
Vaibhav, hi, good afternoon. Make money, but make money where? There's a market with higher volatility, so much noise. We have to, wait till 4th of June and then deal with the aftermath. Even after that, then we get into a full-blown budget and let's see what the new government has on its mind. So, pretty noisy phase for the market. What's your advice, at least for the next couple of months?
I think it's going to be noisy, it's going to be volatile, and which is reflective in terms of our VIX level, which is now currently about 22%. My sense is basically post 3rd of June, 2nd or 3rd of June, I think we should cool off in terms of the volatility. But having said that, as you rightly mentioned, the budget is something which is up next. Probably that is something also we will be keenly looking forward to. Now, if there is continuity in terms of what, where the consensus is currently, then my sense is basically we would continue to see focus on capex-driven industry, which, the government has been very consistent on the supply side. And if no matter, I would say the valuations being expensive, I think they will continue to trade rich. At the same time, monsoons likely to be pretty good. I think rural is something which currently till now has underperformed. I think that is a possibility where we can see some amount of bottoming out and can see some amount of recovery from there onwards as well. And lastly, in terms of the consumer discretionary, I think durable space is something which we continue to like as well. So all of these things are probably where our attention would be.
Vaibhav, good to see you, Wayne. But what to buy from the rural themes? That's the sense you get from some of these FMCG names. Sometimes a longer election, in this sort of a heat, it could support the offtake out there, which could be visible in Q1. There is the input costs that have cooled off as well, and these stocks haven't done much. So from the rural themes, what would it be? Two-wheelers? Would it be FMCG stocks? What else?
Absolutely right, Nigel. I think staples which have been actually underperforming for the last 6 to 9 months. And looking at the commentary which we had in terms of the calls, my sense is basically that we should be looking at some amount of recovery there. While the two-wheeler numbers also continue to be pretty robust and strong. So both of these segments are something one can definitely have a look at it. The only thing is basically in case of autos, there may be some amount of raw material price, escalation kind of kicking in. And as compared to the consensus forecasts in terms of the margins, we may see probably some amount of pressure of margin coming in, going forward, which can reduce the forecasts on the whole sector. So while we are bullish on two-wheelers, I think an eye on the margins would always be there.
Any other sort of individual kind of names, Weber, you want to highlight? Because it's a market full of stocks and the action is all in individual names, various stories playing out. Anything you'd like to highlight?
Unfortunately not, Prashant, but I would genuinely say that the current dispensation, if it, in all likelihood, it continues, and then we do think that industrials as a space, even at an expensive valuation or rich valuations, will continue to see robust interest, going forward. So any declines on that space, I think, should be looked at an opportunity to get in.
So you're talking about equipment makers largely, Weber?
Sorry, I didn't get you, Prashant.
You're talking about capital goods companies, equipment, power equipment, etc. That kind of stuff.
Of course, Prashant. I think that is a segment because my sense is basically the private capex is kind of waiting to kind of get in terms of the plans once the election result is out. I think you will see a flurry of capex projects coming about and the subsequent industries to be benefited, driven by the capex.
Okay, so just to recap, Vaibhav, what would be your top long bets right now? Industrials and capex, capital goods. We've discussed that. What else?
As I said, rural sectors, rural focus sectors, consumer durables, and consumer staples. We do think that they are bottoming out from here onwards, as well as last but not the least, we are also bullish on, or we are getting roundabout bullish on IT as well. So those are the sectors which we think should be looked at.
And to go short, what would you do to counterbalance this?
So short, I would not particularly say short, but underweight for sure, or probably underperformers, I would say, would continue, or we would think that autos is a segment, where we would see some amount of raw material prices, kind of kicking in the next few quarters, which would lead to their kind of forecast getting kind of downgraded as well. So that is a sector which we are probably going underweight on as well.
Okay. All right, Weber, good speaking with you today. Thank you very much for taking out the time and joining in and giving us some perspective on the market. By the way, markets are absolutely flat. Not much has changed. Nifty continuing to be in a bit of a cruise control mode. 67, 68 points higher. That's where the story is. And again, a lot of consumer stocks. Consumer as a sector is doing very well today. So Lever, Tata Consumer, Britannia, Asian Paints, ITC, which is reporting its numbers as well. ITC numbers tomorrow. So all of these stocks doing quite well in trade. Well, with that, let's take a very quick break. We'll come back on the other side. And as usual, we'll get you on all the buzz from dealing rooms. Nimesh is going to join in with the D-Street chatter. And then we'll get some final trading calls with our trading experts as well.
Welcome back. Those are Sun Pharma's numbers for you. At the EBITDA level, it's a beat compared to what the CNBC-TV18 poll was. EBITDA margins at 25.3%, ahead of street expectations, and that's driving a beat on the profitability also. So net profit has come in ahead of consensus, aided by a higher other income, perhaps, and also the increase in the company's margins. We'll pull up the revenue number too, but I think the revenues have come in slightly lower than what the CNBC-TV18 poll threw up. The stock is spiked up. It's still down 0.5%, but it's moving up northward. There you have it. Margins and profits higher than expectations. Revenues are largely in line, maybe 400 crores short of what the CNBC-TV18 poll threw up. Revenues at close to about 12,000 crore rupees. Ekta is now joining in with her first cut and analysis. Ekta.
Thanks for that. Well, it looks like it is definitely a beat which is coming on the EBITDA as well as the profit for Sun Pharma. The revenue has missed estimates a tad bit. We need to see, because the street was anticipating around 12,300 odd crores. It's coming at a sub 12,000 crore figure. So we need to see the breakup in terms of geographies and how exactly they've done in the US business, the specialty business, which includes key brands for the company such as Winlevi as well as Odomzo. So that would be an important parameter to watch in terms of the geographical breakup and how exactly the US business has done. The other income, I assume, has probably aided the profitability. So that is something to consider as well, because that's come in higher at around 600 odd crores, which has aided the profit, and that's why it's optically looking higher. Margins, however, seems to be the one parameter which is standing out at this point in time. Margins of around 25% versus our estimates of around 24%. So that definitely seems to be better than expectations, considering that it's coming on a revenue base which is short of expectations as well. So margins seem to be a beat. Street is probably a little disappointed with that higher other income component, as well as awaiting the geographical breakup for Sun Pharma, which would definitely be more crucial.
You know, we have Forum Parekh who's joining us. Ekta, stay on, and if you want to take questions, do come in. Forum, good to have you with us here. She's, of course, a research analyst, tracks the space closely. Just your first thoughts on what Ekta outlined. Are the numbers coming in from Sun? I mean, at an EBITDA level, seems absolutely bang in line with expectations.
Yeah, hi. So though the numbers, the frontline numbers are a little weak and below our estimates on all fronts. So sales is actually missed by 2% and PAT is missed by almost 4%. So for us, the numbers on all fronts have come below our estimates, and therefore at least the first look on the numbers looks disappointing. We were working with almost 26-27% EBITDA margins. So clearly the winner numbers and the margins are a miss for us.
Oh, okay. Forum, in terms of geographies as well as the US, what were you expecting? If you can just highlight expectations from the US, India, as well as the specialty business.
So from the numbers that I have, we were expecting almost 13% growth from the US side. From the India side, we were also expecting 12% growth. And on the dollar terms, we were expecting $430 million run rate for the US sales. So I am still awaiting the geographical numbers. But on the blended side, the sales has come almost 2% below my estimates.
Okay. All right. I think we have Prakash Diwan with us to take us through the numbers as well. Prakash, hi. Welcome to the show. As we speak, Sun Pharma has now turned into the green. The US business is coming flat on a Q-on-Q basis. It's coming at around 476 million versus 477 million sequentially. I don't know if the street would be probably disappointed with no sequential movement, but the stock has recovered. Your first take on the numbers?
No, so absolutely. I mean, there was an anticipation of the U.S. Business contributing to at least, mid-single-digit kind of growth, if not higher. So there could be disappointment, but there's something else that probably, the market probably is reading into positively. Otherwise, the stock would have not recovered so well. And my sense is, the India business is also probably done much better than what was anticipated. That's where things look positive. And the tariff numbers had given a very clear indication specialty, US specialty would also start kicking in, maybe with some lag. And that's the reason why market's willing to give it that much of, leeway.
Okay, your reading of the margins at 25.3%?
Yes, so, that is the other thing where we'll of course have to wait for the management committee to understand what's led to this level of margins. And more importantly, the whole thing is about the remediation. I was looking at if there is any comment on the remediation of the recent audits, then of course, Mohali and Halol, we'll be able to pencil in some acceleration in terms of revenue growth. So that has been missing for a while. So that is what I'm looking at more importantly with the margins.
Okay, all right. Thanks a lot, Ekta, Forum, as well as Prakash for joining and giving us a quick analysis on Sun Pharma. But the market is calling for our attention. I'll tell you what's happened as we were analyzing the Sun Pharma numbers. The Nifty Bank has managed to put its head back above the 50 DMA. So we went down to around that 47,700 odd. We have bounced close to around 150 points. And there's a big spurt in the premiums on the call side. Some of those called writers could get stuck on the wrong side, going by this kind of bounce that we've seen. So keep an eye out on that front. The Nifty Bank, that's the big mover today. If you plot a chart with the Nifty Bank and the 50 DMA, that'll give you a better picture. For the time being, let's get in Nimesh. Nimesh, tell us what are you picking up in D-Street Chatter?
I know, Nigel, today I would say it's a day of profit booking. The Nifty may look in the green, it's up 70 odd points. But that's largely because of a few large cap names like Reliance, ITC and Lever. Apart from that, there is profit booking across the board. Even if you look at the momentum PSU boys, there is some bit of profit booking now. Even the metal names, despite strong global markets, there is a bit of profit booking in the metal names as well. So looks like a day of profit booking across the board, including the PSU stocks. The one space which deserves mention from a flow perspective is the bank Nifty and the bank stocks. The Nifty bank is down, well, it's recovered from the lows. There is selling pressure from the larger FIs is what I understand. And across large private bank names, there is selling pressure from the larger institutions. So while it's been a big underperforming sector, so to speak, in this month, still there is selling pressure from the larger FIs. So that's the way to read as far as the financials are concerned. On the other side, some bit of defensive buying is seen in the pharma names. Some FMCG stocks are again well bid is what I understand. But broadly, from a flow perspective, it's negative on the financials. And today's Nifty move is largely led by only a few large cap names. But otherwise, it's been a profit booking day. Okay, all right. Well put, Nimesh. What about individual stocks? We continue to see big blocks, QIPs as well. That trend continues. Tell us more. So again, as Nigel pointed out, there are a lot of large blocks happening. So the first stock on my list today is Aarti Pharma. That's been buzzing in trade today. There was a block nearly 1.5% equity changing hands. And I understand that a leading domestic mutual fund was a buyer in today's block. So the disclosures could be quite interesting there. Even the second name is part of the block. So Granules saw a big block in the pre-open today. There was a disclosure that the promoter entity has sold, but in terms of buyers, I understand a leading domestic PMS, a leading domestic mutual fund, and some larger HNIs have bought into today's block. So again, disclosures that could be quite interesting in Granules, and the stock is actually at days high of 4%. The third name is ONGC. It's been flat in trade today, but for the last couple of days, there is buying happening from larger institutions into ONGC. So expect high delivery volumes for second day running in that particular name. And the last is Eris Life. Been a flat stock for the year. Been almost like, why today the stock is flat. Again, but the sense is that there could be a large block in Eris Life very soon. So that's something to track going forward in Eris Life.
Okay, thank you very much for that. And the Coforge QIP, which happened today, was also a part of D Street Chatter on the 10th of May. So one more, win for Nimesh there. Thank you very much. Let's get to Shrikant now for a few BTST calls. Shrikant?
Yeah, I think the way Bank Nifty recovered from the lows, it was like it is consolidating within the broader range of 20 days simple moving average and 100 days simple moving average. And after hitting the levels of 47,500, now it is again rebounding. So we are of the view that now we should look for again adding some bank stock to the positional trading portfolio. And in that space, we like ICICI Bank, which is currently around 1,115. I think from here, again, stock can move to the levels of 1150, 1160 sort of levels. So it's a buy at current levels with the stop loss close to 1095, which is today's lowest level. And we also like IRCTC, which is currently trading around 1115.20 levels. it is forming some rounding bottom sort of formation, and it is very close to its previous all-time highest levels of 1170, 1180. So on the dismissal of that, we can expect a good amount of upward activity in the stock. Currently, it is consolidating, but it is holding well above the mark of 1100. So it's a buy at current levels with a stop loss close to 1080, and we are expecting 1180, 1200 on the high side.
Thank you for that. Nifty is now back above 22,600 as banks are trimming their losses. So whether it's ICICI Bank or even an HDFC Bank is now back in the green. But ITC has also been a big mover ahead of its numbers tomorrow. Mangalam joins in with the key expectations. Mangalam.
It's been a big mover indeed, and the street is expecting soft numbers though this time around from ITC. What we're looking at in terms of revenue, standalone revenue, that is ex-excise, would be a growth of just about 3.5%. A little under 17,000 crores on the top line is what the street is working with. This number compares with 16,400 crores thereabout at the same time last quarter. The EBITDA grows about 1.5%. We look at 6,300 crore, which means that the margins are stable around that 37% mark itself. The net profit on the back of that grows just about 0.5%. You're looking at a number not more than 5,115 crores. That's what the street is expecting. So soft numbers expected, but the stock too has, not done much over the last 1 year or so. From the peak of 500, it has seen a bit of a correction as well. So trading at around 25 times 1 year forward earnings. What will be important to watch out for ITC would be the segmental business. So 0 to 1% sort of growth expected in cigarette volumes. That would equate to a cigarette revenue growth of around 4 to 5%. 7 to 9% growth is expected in close to, with closer to high single-digit volume growth in the FMCG business. And in the FMCG business is the margin, or the EBIT margin will be extremely crucial to watch out for. Hotels, that's doing extremely well for the company, as we've seen for the hotel sector, 14 to 16% growth out there. And agri business will grow just 5 to 6%. That, of course, is impacted by the ban on exports of wheat and other agri products. And because of the weakness that we're seeing in paper, 5 to 10% decline in the paper business is what we're watching out for. 0 to 1% cigarette volume growth. If there is any more than that, the street would like it. And then all hopes will be then on the budget, what happens to the taxation, etc. That would be the next big trigger, along with the demerger of the hotel business when that process completes.
Thank you very much for that. By the way, Sun Pharma is now settling higher, 1% up on Sun Pharma. So initially the stock was down 0.5%, went down to a 1% cut, but now Sun Pharma is up 1%. Get into a break. We'll come back close to the market close.
Welcome back. Well, the markets have seen a good recovery. It's expiry yet again. We had highlighted earlier today that, the Nifty Bank is going to be the one that's going to swing things. And that's precisely what happened. The Nifty is going to go home with a gain of close to under 100 points because the Nifty Bank has recovered more than 250 points from the low point of the day. Let's get in Amrish Baliga. Amrish, I was looking at CIE Automotive. And incidentally, I think that's the stock that you're tracking. Tell us more.
That's a part of the CIE Automotive Group of Spain, basically an auto ancillary, manufacturing forgings, stampings, gears, castings and composites for light vehicles, 2- and 3-wheelers, medium and heavy commercial vehicles, as well as tractors. So they have a diversified customer base, plants across India and Europe. About 60% of the revenue comes from India and balance from Europe. And about 40% of the orders which come from Europe is EV related, so clearly future-proof as such. And if you look at the cash flows, they have a strong operative cash flows, and the management also is expecting EBITDA margins to stabilize about around 16%. Currently, is about 15%. So for calendar year 26, in fact, they follow calendar year, not financial year. I'm expecting an EPS of about 31, and I have a price target of 620. I mean, today it's moved decently well, so possibly one can wait for a small correction to buy in.
What about something like a JK Tyre? The numbers are very strong. But rubber prices have moved up in Q1, which means margins could come under pressure in the subsequent quarter. So considering that we've got a pop today, would you accumulate it or would you use this as an opportunity to lighten up?
No, I would possibly hold on. I mean, this has been on my buy list for a while. And I mean, with these earnings, clearly, I think we'll see some more upside. And yes, I mean, it's quite difficult to pass on the complete rise in rubber prices. So possibly there can be a small cut in margins going ahead. But I think people should utilize this momentum, wait for a while, and then possibly book out at slightly higher levels. In fact, I see the stock still going up further and the 5 to 6% more from here.
So many companies we've been sort of featuring as part of earnings, etc. Action Construction was on today. We were earlier talking about Tech Wabag, and over the last few days, so many others. Amrish, anything, and one common theme with, especially with regards to elections and the thrust of government spending, etc., is industrials. Valuations are all high, but the point is that the cycle is going to become bigger, and the thrust remains. The valuations also balloon in many cases, as we've seen in the past cycle. What do you like in that sort of area? Industrials largely.
No, I mean, like one of the stocks which you just talked about, I mean, Tech Wabag, I mean, that's been on my buy list for a while. But since the stock had already moved up decently well in the recent past, and the earnings were decent, but I think it's disappointed a few, based on the margins, because if you look at Q-on-Q margins, that came down a bit. The profits also did not really move up too much. If you look at Q-on-Q, I mean, it's about 72.4 crores now. It was 62.9 last quarter. So based on the sort of a rise in prices as far as the stock is concerned, because of which we saw some amount of disappointment, and we have seen the correction. But I would say that utilize that correction to buy in, because this company has an extremely good visibility because of the order flows they have seen. I think if you can hold on for the next 2 or 3 years, I mean, it can even be a doubler from here.
Okay. That's Tech Wabag. All right. Absolutely close to market closing. Amrish, thank you very much for joining in a little bit of a shorter chat today. But we do have the final rates to now look at. And it's actually turned out to be a pretty good move for the market, about 90 points up on the Nifty. And 22,600 is back on the screen. It's been that slow crawl, that slow grind higher. Started about 6-7 trading sessions back, and it's continuing. Today, you've got to thank the FMCG space, really, for leading from the front, and other biggies like Infosys and Reliance for chipping in. So if I talk about the movers and shakers on the index, Cipla is in leadership position with about a 3% up move. And then the consumer stocks, Tata Consumer, 2.5%, Lever, about 2.5%, Britannia, Asian Paints, ITC ahead of numbers. Lots of buying on these stocks. And then the other big boys, the heavy hitters like Reliance, 1.5% up there. Infosys is also looking quite smart. L&T has contributed. So basically, a lot of these other parts of the market making up for the weak spot, which remain, of course, banks.
Banks and metals. So in the financial pack, you have Shriram Finance, State Bank of India. These were the top two Nifty losers, 1.5% gone. And metal names like Hindalco, JSW Steel, Tata Steel corrected. Outside of the large cap in the metal space, you also had names like Hindustan Copper, you had SAIL. These were stocks which were under pressure. But so much in the mid-cap space, right? Whether it's BHEL or a PI Industries. Yep.